Welcome back everybody, Sive Morten here with the Forex Peace Army.com. Let's update our view on the gold market. So as we said yesterday, gold in general has shown actually different reaction on the Lisa Cook firing, and it's actually it is understandable because it is uncertainty, it is pressure on independence on the Fed, and that triggers the demand for the safe haven, which is a gold. And actually you could see that if in euro currency we saw a drop due to the strength of the United States dollar, on the gold market it is opposite reaction. So today's situation is gradually start changing. So if we take a look at the euro currency, we talked about this just a few minutes ago now, a video on the euro currency. There we see signs of the sentiment changing, that the market is turning up slowly. On the gold market, it stands even better just because it doesn't need to turn up, it just could keep going higher. So currently market is coming to important points, and you can see there's some local top on the daily chart around 3410 area. This might be interesting because on intraday charts we also have a target very close to this point, and that might make impact on your decision probably if you're considering position taking here, so it might help you a bit to come to final strategy. So on the daily chart everything remains mostly the same, market is moving higher, trend remains bullish, and most information stands on the intraday charts. On the full time frame chart, take a look what has happened. Market finally has reached the COP target, but here we have very different picture. If you take a look, for instance, on the FX broker chart, retail broker chart, in my case this is FXCM, but probably you will see the same picture on any other broker wherever you're trading with. Nominal trend here remains bullish by MACD, and here you can see kind of maybe some even bearish grabbers around forming on the top, but in reality if you take a look on futures chart, you could see that picture extends absolutely different. Market shows the bullish trend, and here actually it might be a bullish grabber formed in this candle. Once it will be closed, and if it remains above approximately 34.18 area, so this might be bullish grabber suggesting for the upward continuation. So in general, COP is minor target and not necessarily market is stop here. More probable that it's trying to reach the top, as I said, around 1310, and trying to flirt with it, maybe grabbing some stops or something. It seems to me as a more probable gold behavior, which is very typical to this market. So on the hourly chart, this is also has some reason, because based on these hand shortages that we discussed already, minor target has been completed. Market has shown minor reaction, which is absolutely normal. Once again returning to the subject of the splitting position in part. Why we said yesterday, think about maybe taking minor part of your position around the neckline. So we talked about this level, and if you remember, also 3360 confluence. Because we do not know what will happen. Market could reestablish our protection right from here. And once again, this strategy just proves its reliability, proves that in most cases it gives better results. Second moment to recall is the divergence. Recall what I said yesterday about this divergence. Yes, it is brings some risk, but it is not accompanied with some strong resistance level, and in most cases the divergences are not reliable. And you can see this particular what's going on right now. So what actually you could do currently if you haven't taken position with these lows on Monday that we discussed, if you haven't taken position yesterday but you still would like to take the long position, here you have two options by my view. First, you could try to ride with this upward tendency that stands right now with the high lows, high bottoms, 2 step forward, 1 step back. Or alternatively, you could try to wait when the market will test 3410, 3418, 19 area, this is the OP target. And then if retracement starts, you could try and take position on retracement. That's two different options. If you would like to take position with this tendency, probably you do not need to, well, place your stop too far. To hide your stop just under recent lows will be more than enough, because you're taking a bet on the tendency. tendency will be broken if somehow market just dropped below the previous lows. That's it. Speaking about this wedge pattern, potentially it is bearish, so we know that the rising wedge classical is a bearish pattern. But in the modern market, wedge consolidations very often becoming the starting point of the accumulation of the price and some power, accumulation of the power, and very often market shows upward acceleration out from the rising wedge pattern. This is the modern reality. So that's why, although yes, it might lead to some starting of the retracement when the market will reach some levels that we already mentioned, around 34.10 maybe. We can't exclude this, but it also might be actually preparation for just faster action. So do not pay too much attention to this narrowing shape. We should take it in consideration, but we should not actually pay too much attention to it. So that towards what we have is the bottom line. Overall context remains bullish. We do not consider any bearish positions. Two options for entry, either with this tendency, with the placing tight stops, but without any significant patterns, with the aiming on the target that we have here, right? Second option, wait when the market will hit this with this resistance, maybe we'll show some pullback, and then make a decision on another entry on a bit deeper retracement. That's potentially what we could consider for now. That's probably all for now. See you tomorrow.